What's going on, guys, and welcome. I am way late, and it is Sunday morning, and we are wrapping up the 22nd week of investing. I did weigh myself and do all that stuff on Friday, but let's dive into the progress that we've made and see where we're going. All right, so here's my channel tracker, and I have it set to June 2nd of 2023. The reason why is keto is officially over, and my weight, I didn't hit my reach goal, but I did hit my main goal, which was being less than 270. We finished out at 266.8 pounds, which was awesome. It's a total weight loss since the beginning of the channel of 31.9 pounds. And it's a total weight loss of being on keto of 22.8 pounds, or something like that. I forget exactly, but it's more than 22 pounds, which is awesome. I'm very excited about that. That was a 1 month span of keto. Now I'm taking a little bit of a break from the diet. And that's also part of the reason why I am very late on this video. You know, on Friday night, I went to my favorite ramen spot, got some killer ramen, made a quick short about it. You should check it out. And then last night, I went to Zuma Boston with my dad. Took him out for an omakase dinner. It was absolutely stellar. And I will tell you, I think I'm going to start a diet back up on Monday. I feel much better eating a lot cleaner. Not to say that Zuma made me feel bad. It did not. It is delicious and incredible. But I feel like I've made so much progress so quickly that I don't want to derail that. I was going to take a whole week. I'm not quite sure about it. I'll see how I feel in the morning. It'll probably be based on what my weight is in the morning. But so that's going pretty well. Investment balance, we're at $6,218.55. Our total dividends earned are $55.57, but that should be changing this week. Total growth, we're at $18.22 of portfolio growth. That's really good news because we were dipping down to the negatives for a little while, and I'm looking forward to that going back up. YouTube income still at $100. We haven't actually gotten paid from YouTube, but we have gotten paid a little bit of money from people signing up for Sofi. If you guys are looking for a good place to invest, they have a promo where if you put $10 in on a brand new investing account, they give you some free money. So that's worth it. Not that I'm a credit counselor, wealth manager, financial advisor. If you want to do that, there's a link down in the description. Total subscribers, we're at 1,773 total subscribers. So to the new and the old, thank you. I appreciate y'all. And then total views, we are at 202,856 total views. And our total watch hours is at 3,808.5. So we're slowly creeping up in the watch hours. I'm looking forward to getting monetized. My goal is to try to make a couple more extra fun videos this month. Try to make some of the content that I like to make. And I should have some more available time this month, which is good to do so. So maybe we get monetized this month, maybe next month. I'm hoping that we can get monetized this month. That would be so awesome, so cool. And then, not to say it's not worth it running this channel, but it'll be more worth it when I'm getting paid. Sorry to be shallow, but this is a finance channel. All right, so with that said, we're going to take a look at some crazy moves that we've made over this week because we did a lot of stuff, and there's some stuff that's a little more advanced than what we typically do. So we're going to take a look at that and kind of explain what's going on. But first, we are going to dive into Sofi, and then we're going to look at Seeking Alpha to track the portfolio. All right, guys. So we are in Sofi, and we are looking at my position on Tesla. Okay. I said we were going to do something crazy, or we did something crazy, and this is it. All right. So Tesla is YieldMax's Tesla Option Income ETF. It's basically a fund that buys and sells Tesla call options in order to provide income every single month. All right. They don't hold any Tesla stock. They're just buying and selling calls on it. That's pretty much it. So this fund, it's up to $15.76 at close of market on Friday. In after hours trading, it's at $16 even. It's a fund that has been talked about a lot for a couple reasons, and it's definitely way sketchier than anything I would ever invest in. But I think that some of it looks so appealing. You're going to see a lot of investors throwing like $1,000 to $10,000 in just to see what happens. So get ready for that in like your YouTube feeds and stuff. But we're going to be that guy that kind of jumps in early. It's only been around for like 6 or 7 months. So again, a very, very new fund. But we'll look at why I like it and what did I do that's a little bit ridiculous. But I like it for this reason. Dividend yield of 25.84%. And that is growing because remember, this has only been around for 7 months. So looks like the forward dividend yield might end up at the end of the year being somewhere around like 38, 39%. So, you know, there most months this is paying a 3% dividend, which is crazy. So, you know, if you have $100 in it, you're getting $3 of dividend payouts monthly. That's at least just how it looks as of right now. So this works very differently again because they don't actually hold anything. It's sort of based off of who's buying and who's selling. Because as you buy more of it, the brokerage houses are what are called market makers. They can actually generate new shares or remove shares from the market based on the flow and purchase of those. And this market cap is only $82.7 million. So very small market cap for a fund. Very, very small. Again, I think there's potential for this to grow as more people find out about it. And I think in something like a Roth IRA where you don't have to pay taxes on the dividends, you know, this could have very, very positive long-term upside potential. So we'll see what happens with that. One thing I don't like is 52-week high is 21.76 and 52-week low is $12.53. So very volatile, as a lot of funds are when they start off. So don't get me wrong, like I get that, but very volatile at the beginning. You know, the 3-month chart, very volatile. You know, March 31st, it's at 1576, or sorry, 1725. Then it drops down to 1266 by April 26th, and now it's back up to $16 an after hours trading. So, you know, kind of all over the place, but we're not in it for the stock price. We're in it for the dividends. And that's really the most important thing. So how does this work again? Basically, it follows Tesla's price to a degree, right? So if Tesla's skyrocketing, this is going to go up because you can earn money off of the call options from Tesla going up. But instead of seeing it as long-term growth in the price of the Tesla stock, you're seeing it here as a dividend. Basically, from what I can gather or what I've witnessed, that's kind of how it works. So why am I saying this was a bad purchase? Because I don't think it's a terrible purchase, but it's definitely riskier. But how I purchased it is why I think it is sort of ridiculous. And we bought this using margin. Okay? I know that just lost a bunch of people. And I know that's a facepalm moment. But here is why. So first, what is margin? Margin is a loan from the brokerage, being Sofi, using my portfolio as collateral. So what does that mean in a worst case scenario? If I lose all my money on this Tesla call options ETF, then I could lose my whole portfolio if I put too much money into it. That's a big red flag, right? That is a really big red flag. Kind of like a mortgage, you know, if you don't make the payments on your mortgage, you'll lose your house, right? Similar situation. You're using something or an asset that has value to generate a loan. So part of the reason why I did this, though, is because even though interest rates are very, very high at this point in time, my loan rate through Sofi for margin is only 8.5%. Right? Only 8.5% sounds really, really high. And in most cases, that is really, really high. However, that's going up against a dividend yield of 25%, or as better explained with Tesla's website, you know, they're paying, again, about a 3% dividend yield per month. Okay? So what does that mean? How does that break down? And we're going to take a look at that. So if I scroll down here, right? I spent $305.99 on margin, right? So we took a loan at 8.5% for $305.99. So to figure out what that means, we're going to take 305.99. We're going to multiply that by 0.085. So that's $26 of interest over the course of this whole next year. So if I keep this margin loan open for the entirety of next year, or the entirety of the year, I'm going to pay $26 of interest. Now, if we divide that by 12, that means we're going to be paying $2.17 per month. So we pay $2.17 per month in interest. All right, $2.17 a month. Now, first of all, if we come over here, unrealized gain, we're at $13.98 of profit so far. So realistically, like we're covered for the interest that we would have paid on the margin anyway. But that's not the whole point. The whole point is that we're earning 3% a month in a dividend payout on this stock. So if the stock price is $16 right now, $16 times 22 shares, right? Or I'll do 22.07 because that's what we actually have. So $16 times 22.07 shares is $353.12. And then we're going to do times 0.03. So we're going to earn $10.59 a month. So if we're earning $10.59 a month, and then we subtract, I'm just going to round it up to $3, right? Assuming that some months on the dividends will be less or whatever. But so the $3 worth of margin off the $10.59, that's a profit of $7.59 a month times 12. That's $91 of profit on this position, which we didn't have to front any money for. So if we're just like, we took out a margin loan for $306, our profit on that's going to be $91 a year after paying off the margin loan, and that should be pretty good. But again, with margin, you guys need to be really careful because a margin position, you don't want to be in a position where you could ever lose your portfolio on a margin call. What a margin call is when your portfolio dips down beneath a certain point where they say, all right, cool, like we don't want to have this loan based off your portfolio anymore. You got to pay it off right now. And in order to pay it off at that point, you have to sell off stocks or you got to just send them money. You can see we're doing this with a very small amount of money, relative to our portfolio. So we're taking out a $306 loan and we're using a $6,000 portfolio as leverage. And remember, we're also putting in $50 every single Monday through Friday. So if I'm contributing every week, just about enough to cover the margin on this thing, even if our portfolio is dropping at an extreme rate, we're still contributing weekly enough to cover this whole margin loan situation. So, for that reason, I figured I'd give it a try, see how it works. Maybe we increase the margin position on this. Maybe we get rid of the margin and I just say that was a fun experiment, but thanks for the $20 of profit, like that kind of thing is fine. That can happen. But I do want to sort of experiment in some other options and different ways to make money using a portfolio balance, but also doing it in a respectful and not so ridiculous way. You know what I mean? So we're treating this with respect. We're doing it safely. I can cover the $306 if they say, hey, we got to take the margin call, send us $306 to pay off the loan. Yes, I can give them $306, but I don't expect this portfolio to end up being like 50% margined out. So yeah, I figured I would walk through that because it looks a little strange and it is a little different. But now that all that's said, and that was very long-winded, so I apologize, but it's crazy and it's a little bit different than what we normally do. I'm going to open up Seeking Alpha, and we're going to actually review the portfolio and what's going on. All right, so here we are in Seeking Alpha. We're going to take a look at basically what's going on with the portfolio. I have everything here sorted by value. And at the top of the charts, we have SCHD, Charles Schwab's dividend uh, equity ETF. So that is $1,070.22. That's 15.02 shares. And the price has come back to $71.24. So a huge gain on the day for SCHD. The forward dividend yield is back down to 3.35%, which is cool. And I think we might get a dividend payout this month from SCHD. They haven't announced it yet, but it's on schedule for that, so that'll be good. Realty Income Corporation. So we are at $1,044.54. That's 17 and a half shares, and the price is still below 60, $59.70, which is great because the dividend's coming out. That forward dividend yield is still what I would consider in that buy zone of the yield being above 5%. If the dividend yield for Realty Income Corporation is above 5%, I think that's buy all day. If it's below 4, I think that's kind of like the pricey point. But looking forward to getting the dividend on that while the price is still low. I hope it stays below 60. I really do. For the next like 2 weeks. JetQ. So JP Morgan Equity JP Morgan Nasdaq Equity Premium Income ETF. We are at $816.77. That's 17.32 shares, and the price has been kind of bouncing up and down between like $1. So we're at $47.17. It's good to see it above 47 again. Forward dividend yield looking like 9.23%. And we do have a dividend payout coming out this week, so that's exciting. Let's just take a look here real quick. That dividend announcement was on the lower side at 36 cents per share. So kind of surprised to see a lower dividend payout. But if we look at the dividend history of JetQ, it has only been around for a year, and we did see a 33, or I'll call that 34-cent dividend payout last year. So, I'm hoping that they keep everything in line so that it's a dividend increase year over year. But, it kind of is what it is. They, at the beginning of last year, they had some lower dividend payouts. I just hope that they grow the dividend as JetB has done. I hope they take the same approach with JetQ. So, anywho, popping back over here, we're going by value. All right, so Pepsi. Of the stocks that we're investing $5 a day every Monday through Friday, Pepsi's still leading the charge at $564.69. That's 3.07 shares. And the price has gone back up to $184.06. Now, unfortunately, I had that call option that did expire worthless. I thought it would bounce back quicker. It looked like it was going to, and then something happened in the market and everything dropped, and I was like, no! But then it bounced back up to 184. So you win some, you lose some. That's okay. The JetQ position will not be growing this month. So forward dividend yield at 2.75%, which is still awesome. And we are getting paid out a dividend at the end of this month. So that's pretty exciting. Good to see as always. Now, JEPI. So JP Morgan Equity Premium Income ETF. This is a lot more diversified than JetQ. We have $558.36. This recently overtook Procter & Gamble in our portfolio as the second highest holding for $5 investments. And we are at 10.27 shares. The price is pretty low for JEPI at $54.37. And the forward dividend yield is now looking like 8.06%. We are getting paid out this week from our JEPI position. And again, we're just going to look at the dividend history here. Actually, let's look at the payment first. So another 37-cent payout from JEPI. We're going to look at the dividend history here. Yeah, I mean, this is the lowest payout that JEPI has given in the past year. So, Yeah, definitely a little disheartening to see JEPI with such a low payout. I hope that they can continue to raise their dividend year over year as they have for the past 2 years. We'll just see how that plays out. But unfortunately, that is a pretty low payout from JEPI. Um, and that's showing now in the total forward dividend yield. So, hopefully we have a big month this month where we see that dividend pop back up. But the market was kind of up and down, so I get it. Moving into Procter and Gamble, we are at $553.02. Excuse me. That is 3.77 shares of Procter and Gamble, and the price is at $146.52. So dividend yield is at 2.57, which is fairly high for Procter and Gamble. We did get paid out of dividend last month, so it's going to be a while before we see that back again. BlackRock is creeping up the charts, though. So BlackRock, we are at $547.91. This could overtake Procter and Gamble this month. I sort of expect that it will because we are getting paid a dividend from BlackRock. We have 0.8 shares at $681.86 a share. The forward dividend yield did drop below 3. So it's kind of where it normally is. If the dividend yield is above 3%, that's like a big buy flag for me. But 2.93 is like, okay, we're back to normal. But yeah, so we are getting paid a dividend at the end of this month for BlackRock. And I don't know, just watching BlackRock, the dividend right now, almost enough to overtake Procter and Gamble. Not quite, but it's pretty close. MPW approaching the $500 of total market holdings. We have $484.26 there. That's 58.7 shares. And the share price is back into the eights. I love it. So we're at $8.25 a share. Dividend yield still looking stellar at 14.06%. We have the, they're going to take the snapshot for how much we get paid out next month. So big dividend push next month from MPW. 29 cents a share, though, times 58 shares. That's going to be a big jump for us in our holdings there. When we're getting like 2 free shares of MPW on the dividend payouts, like that's sweet. I love that. AT&T is just a total nightmare, bringing up the rear of the $5 daily investments. So we have $459.19 here. That's 30.19 shares, and the share price is $15.21. This dipped into the 14s, guys. So low because Amazon is now talking about coming out with their own very inexpensive phone cellular service as a like Prime Premium type plan thing. So all the telecoms that have already been getting beaten up just took a bath. This is just the worst holding in my portfolio at this point, but it is what it is. We're going to continue to buy it because AT&T is a massive company that owns a lot of things, and we're going to continue to grow our position here. And, we bought it for a lot more for a very long time, so we'll buy it for cheap for a very long time. We'll see what happens, and maybe we decide to switch it out for something else and leave these shares in the portfolio. Haven't really decided yet, but I want to just stick it out. Well, anything that we put in the portfolio, I do want to buy for at least a full year because with dollar cost averaging, it all averages out. That's the whole point of dollar cost averaging. Look at our position on MPW. It's already coming back up. Look at our BlackRock position. It's almost better than Procter and Gamble. So, by buying it every day when it's low, the whole thing is just don't panic. So like right now, I'm in like, AT&T is the worst. In 6 months, if AT&T goes back up to $17.50, I'm like, AT&T, let's go. Like that's just how it is. So we're gonna keep buying it for at least a year. And then we have these 2 wildcard stocks. So we talked a lot about our Tesla position earlier. It's $347.76. That's 22.07 shares, and it's at $15.76. And after hours trading, it's actually a little higher. But that forward dividend yield is looking like 33.52% over here because they're calculating for like what we'll get paid. And that dividend should be coming out on the 15th of this month because it does pay monthly. Aptly, So we didn't talk about Apply. Apply is the same thing as Tesla, but instead of using Tesla call options, they're using Apple call options. I would have, and I might still throw some margin purchase on this as well. The reason I have not, though, is because this hasn't even paid its first dividend. So I want to see what the first dividend even looks like, see what the buzz around it is like, and see if people jump on it. If they don't pay a dividend that's as high as Tesla, I don't want to throw a bunch of money and margin into Apply because the stock price could tank and I don't want to lose like half of my margin money. Even though it's a loan that I'm taking out in the money, I still don't want it to like lose a bunch of value. So that's basically what we're looking at there, and that's what's going on. All right, guys. So in summary, if you're going to use margin, don't use it in a way that puts your whole portfolio at risk. I'd hate to see you try to make an extra $10 a month of dividends and lose $6,000. Not a good choice. Obviously, you do whatever you want, but that's not my advice. But I'm just a guy in a triangle-shaped room. I'm not a financial advisor, so what do I know? Maybe that is the way to go. I don't think it is. But yeah, so basically, life has been pretty good over the past week. Just a lot of work. It's been sunny, then it's hot, then it's cold, and blah, blah, blah. It's crazy in the Northeast. I don't know if anyone else who watches lives up here, but it's been just the Northeast U.S. is a disaster right now, at least weather-wise. But yeah, it's been exciting. The weight loss is going well. Hopefully I look a little better. I feel a lot better. At 266 pounds, my total end goal is to get down to 225. I am 6'3" and I'm a pretty wide framed guy. So for me to get down to 225 would be absolutely unbelievable. So that is my reach goal. And it's exciting to only have like 40 pounds more to go, or 42 pounds more to go. So 42 pounds, we're almost halfway there. If by the end of July 1st, I'm at the end of June 30th or whatever it is, if I'm halfway there, if we can make all of that whole goal happen in 1 year to go from, almost 300 pounds to 225, that would be the best. Because I know that last, 20 pounds, or the last like 10, 15 pounds is going to be really hard to lose. But I'm keeping up with it. We're still working towards it. I want to be halfway there. So whatever halfway there is, I should probably figure that out. It's like 260. Like 260 is like the halfway point. So I'm pretty much there. But yeah, I mean, that's really the goal. Maybe I'll set it so that my goal is to be 260 by the end of the month. Let's try it. Maybe I can get 255. We'll see. But either way, keep it up. Keep investing. If anyone's following along for motivation, whatever your plan is, keep it up. But to everyone, I wish you happiness, health, and wealth as always. And with that, roll the outro.